Hello and welcome to the ASB Investment Podcast, a show that keeps you up to date on the markets and helps you make smart choices with your investments. The local share market's been out of sync with Australia and the world's major share markets this year. While global shares have set record highs over recent weeks, the local share market has not fully recovered from a 10% slump in the first quarter. Meanwhile, interest rates in New Zealand have been rising and the economy has been back under the pressure of another lockdown. I'm here in the virtual recording studio, i.e. my own house, with the Devon Funds Management's Victoria Harris to discuss what's going on and what this all means for investors. And we'll share our thoughts for the outlook for the rest of the year. These are entirely our own views. It's not investment advice, but we know plenty of experts at ASB who will be happy to chat if you need. All right. Hey, well, let's get started. We'd normally be in a nice studio, but we're actually in alert level 4 here in Auckland still, and recording back at home. And joining me today is Victoria Harris from Devon Funds Management, and it's great to have you on the line. Sorry, we're not meeting face to face, Victoria.
That's all right. Hi, Chris. How are you going?
Oh, not too bad. The standard conversations as we've been chatting about when are we going to get out of lockdown, what might be happening next, but it feels like we're definitely going to be at home.
Slowly forgetting what day it is and what week and what month, and yeah.
Yeah, the weekends aren't that different from the week, are they, these days? But anyway, it's a bit of a wintry feeling Friday here. And what's been keeping you busy over the lockdown? You've had reporting season, I guess, to get through. What was that been like?
Yes, yeah. So the last couple of weeks of August, we had reporting season, which I can't believe I'm saying it, but was actually quite a blessing to be, that busy in lockdown. It made at least the first couple of weeks of lockdown go quickly. So, but yeah, and so now it's just kind of catching up with those companies that look interesting post reporting season. But yeah, I guess the benefits of lockdown is that you can still have Zooms with all these companies in New Zealand and Australia. So yeah, you almost get to talk to more companies than in a usual setting. So that's good.
Yeah, does it make a big difference not to be able to sort of stare at some of these companies you're interested in face to face, or do you do a lot of these meetings virtually anyway?
Yeah, it depends. Like some of the Australian companies, I mean, we've been doing Zooms with them for nearly 18 months now. So we're kind of used to that, and that's good because you actually get to talk to a lot more companies than if you're flying over for a week and got meetings. You get to do them, every day. But with New Zealand, yeah, there is, I guess, the great thing about meeting face to face with management is you do get to stare them in the eyes and get that rapport, whereas through Zoom you don't really. But yeah, it's just I guess the nature of the game, and it's only short term. And hopefully we'll be out of this soon, and then we can have those face to face meetings again with the New Zealand companies, which is good.
Yeah, it's there's pluses and minuses of it, aren't there? And we got really busy just as we were going into lockdown. One of our big forecasts that we've had for a while was that the Reserve Bank was going to hike interest rates, and then that didn't come to fruition for understandable reasons when we went into this lockdown. So it's changed things for us a little bit, but
yeah, it's the and I think the rapidness of it as well. It happened very quickly. We had a couple of hours to kind of get sorted, and then we're in lockdown. So yeah, I think there was one day I had about eight Zooms in a day, and I think the last one I was kind of almost half asleep. It was quite difficult to concentrate for that long. Yeah.
Hey, well, it's been a bit of a funny year, and one of the having just gone through earnings season now, it's interesting how companies have gone. But if we go back to the start of the year, we just seem to have been out of sync with the rest of the world. So maybe starting back in January, what was sort of going on for New Zealand that we managed to dip 10% when other parts of the world have just kept on pressing higher, and we've had this sort of quite different year.
Yeah, well, I guess the difference with New Zealand and the rest of the markets is it kind of comes down to the makeup of our index, and we do have a very concentrated index, especially at the top in terms of the large players. So it's kind of anything that happens with those kind of handful of names, think, A2, Fisher and Paykel, for healthcare, for example, they can really impact, what happens with the overall index. And yeah, like you said, it's kind of, the New Zealand market has always, been the outperformer for a long period of time, versus Australia and the US, for example. And yeah, kind of the more recently, it's definitely underperformed, and it's kind of not something that we're used to. So yeah, it has been quite a stark difference between the beginning of the year and the later part of the year, just due to kind of a few names that have had issues.
And does it feel like we're getting back on track? I mean, at one stage we were down 10% versus that early January peak, and then we've sort of feels like we've clawed our way back. Has that been a catch-up or decent performance from companies that's really helped us get back on track for the New Zealand market?
Yeah, I think it has been. I mean, we've definitely clawed back, particularly more recently, kind of in the month of August. We had a particularly good month, and I think it's more. There's also a rotation going on as well in terms of those companies that are going to perform or recover as we come out of COVID, or what we call kind of vaccine beneficiaries, or COVID losers, which isn't the nicest term, but and so we've seen that in Australia and New Zealand actually, in terms of investors moving more into those recovery names, so those names that sold off quite heavily due to COVID, because with the vaccination rates where they are, and we know we're going to get out of this. It's just a case of when, not if. So those names are expected to kind of get back to earnings growth, and some of them be stronger when we actually come out of this.
Yeah. So did you look at it when you're looking at a company like Fisher and Paykel Healthcare? I guess it's on sometimes and off at times, just as the news flows on the outlook for COVID, I guess.
Yes, yeah, particularly Fisher and Paykel. It's very much what are hospitalisation rates doing around the world, and we obviously saw them be a huge beneficiary very early on in COVID, when COVID was happening, and those hospitalisation rates, particularly in the US, were kind of skyrocketing. And then as things got under control, then their share price followed the fall in hospitalizations, and then we have Delta come back, and therefore their share price reflected that. So it's kind of that is a very much a COVID play, and now the question is, how are they going to perform, in the next kind of 12 months, 2 years, 3 years, because there's been such a pull forward in demand for their product. Are we going to see an earnings hole, or are they going to be able to continue to grow once majority of the world is vaccinated? So there's kind of a big question there. It is a very high quality company, but there is definitely kind of split views in the market about what the outlook looks like for that business going forward.
Well, on top of being locked at home, you've had some exciting news over the last couple of days, with Devon being called out as a responsible investment leader. Tell us about that.
Yes, yeah, we were very excited a few days ago to be announced as one of the top 3 responsible investment leaders in New Zealand amongst the New Zealand fund management industry, and that's a report that is released by Responsible Investment Association Australasia, which is called RIA. And this is our second year in a row that we've been called out, which is pretty fantastic.
Yeah, that's really good news. Congratulations.
Thanks.
And what are some of the other sort of obvious themes that we see in the economy at the moment? We're having this amazing period of for the housing market in terms of prices, but hand in hand with that, there's a lot of building going to take place. How's your approach to that cyclical nature of the construction sector?
Yeah, well, I mean, we saw Fletcher Building have a very good result, which you would have hoped. It's a pretty very strong operating environment for them, both sides of the Tasman. Obviously, these lockdowns, particularly the very strict lockdown in New Zealand, and therefore the no construction kind of didn't help things. And so we have seen a bit of weakness in that name, recently. But yeah, I think that the construction industry, I mean, there's just such an imbalance of demand versus supply in the housing market. I mean, you probably know more about that than I would, but I just think that these companies that are leveraged to the housing market and construction cycle, will continue to do well. We're also seeing this kind of flow on to retailers as well, housing exposed retailers in New Zealand and in Australia, the likes of Briscoe's, for example. We are seeing that kind of wealth effect trickle into a strong consumer environment as well.
Yeah, it's pretty interesting the changes of habits we've made with this lockdown. There's so many of my friends have came out of the last lockdown, bought a new barbecue, or thought about renovating the house and all of this sort of thing.
Yeah.
It's
all those odd jobs, like building a fence or adding an extension to that room or something. If you're going to spend more time in your house, then maybe we should make it, more livable or add that little bit on or something. So I'm definitely seeing that amongst my circle of friends as well.
Yeah, and hey, we jumped straight into the markets, but I wanted to also touch on a bit of your background. This isn't your first time on a podcast. In fact, you've recorded quite a few, and you've also got a pretty interesting website, Raising the Curve.
Yeah.
Tell us a little bit about that and how that's been going.
Yeah, well, I've got a little side business or a side hustle, I guess you'd call it, called The Curve. And it's essentially just all about educating women who want to learn about investing in finance. And I guess the one thing I've kind of noticed throughout my time in the finance industry, with my experience, is that A, there's a lack of women in the industry, but also B, there's a lot of women who want to start that investing journey but don't know where to go, and there was kind of a gap in the market of no place to point them or direct them to go to kind of learn the basics and start that investing journey. And so we created The Curve nearly a year ago now, and it's just gone from strength to strength. And we just produce educational content in lots of different forms, and one of those is through a podcast called Raising the Curve. And we've had pretty phenomenal feedback and listenership, which has been great. I mean, I don't know why people want to tune in and listen to me and all my bad jokes, but so there's a few people out there that do, so that's good. And so it's really just helping women learn the basics when it comes to investing.
I listened to your 12 tips, and to me they were much better than tips. They were like some investment maxims and beliefs that were really consistent with some of the things that we think, which is great. I liked your first one, which was start today, which is really, really good for people that are wondering what to do. But there's other ones like taking a long-term view, which are obviously your beliefs, but also consistent with the approach that we have. So definitely. that's been a new thing for you in this COVID world. What are you thinking for the next 12 months? What sort of stuff's going to be keeping you busy, and what are you looking for in some of the stocks that you're managing within your portfolio to develop over the next 12 months?
Yeah, well, I guess like you said, in this kind of environment, it's you can't. Well, you've got to try and avoid the short-term noise and fluctuations, and really just think about the long-term picture and think what businesses are going to come out of this strange environment that we're seeing. What businesses are going to come out stronger, or be leaders in their field, and what businesses haven't let this kind of crisis go to waste and actually have improved, whether it be at the margins, or have increased their market share, or made opportunistic acquisitions or anything like that. And so we're just really trying to find what are those businesses where the businesses aren't broken, but they're actually going to come out stronger. And we've added quite a few new names to the portfolios, across a range of different companies. So for example, we've got an outdoor media company. Obviously, nobody's advertising on billboards when everyone's locked down. But we don't think that model is broken, and we think as soon as people are out and about again, then the advertisers will come back and demand that those outdoor advertising spaces. So that's one, for example. Another one is a company where it's an online classifieds company selling automobiles or cars, and again they're just going from strength to strength. So there's a ton of opportunities out there, and I think the great thing about volatile environments like this is that it does lead to opportunities and getting great businesses at great prices. So it's kind of trying to not get caught up in too much of the noise, and just continuing to have that long-term approach, which can be easier said than done sometimes. But it's definitely all about taking that kind of long-term view and finding those businesses that'll be stronger once we come out of this.
Yeah, do you find that with what you're doing, and people know, I've got this friend Victoria who works in investments, and then when they want to talk to you, they think, what's a tip? What's a good stock for me to buy? And then we end up sounding pretty boring because we go, well, it doesn't really work like that. We take this really long-term approach, and it's interesting trying to do that at times like now where the world seems so different, but to go, well, what's it going to be like in 2 or 3 years' time? And I find that forecasting interest rates, we've been in this weird world for such a long time. It's of low interest rates and managing this pandemic, that sometimes it's quite hard to go, well, what is it going to look like? What will a normal interest rate be in 4 or 5 years' time when the world gets back to normal? And I imagine in your line of work, you get those same sorts of questions and those same problems of going, well, what do we think is going to be New Zealand in 2023, and what does it look like? And what companies will go well in that environment?
Exactly. And what kind of what's changed in the macro environment as well? Because obviously there's a lot of talk about inflation and what that will happen, what impact that will have on the environment as well with companies. And it's constantly moving and adjusting and changing your forecasts and your assumptions. And I mean, if you'd told me 18 months ago we'd be in a level 4 lockdown, I would have probably told you that you'd been having a laugh. So it's kind of constantly reassessing what's going on and looking at key market indicators and economic indicators and running scenarios with investments about what if this happens and what if that happens. And that's what I love about the markets, is that as soon as you think you've got it, something else changes. So it's exciting.
Yeah, the interest rate ones and inflation that you mentioned is interesting, and I get asked a lot. Well, where will interest rates settle? And gee, they've lifted a lot over the past year from the lows. Did you get much of a theme from that, or any concern from the businesses you're looking at about A, their sensitivity to rising costs and inflation, and B, the higher interest rates that seem to be in the pipeline for us all. How did that pan out for the companies you've talked to over the past few months?
Yeah, that was definitely the key thing was inflation, labour pressures, supply chain pressures, inventory issues. That was very much, but inflation was definitely the overarching kind of concern or theme that came out of reporting season. Whether it's transitional or is actually, we're in for an increase in inflation, over the long term. It's hard to say, but there's a few things that do make it seem like it's transitional, in the fact that around that supply chain congestion and the lack of mobility within the labour market because of those COVID issues. So I'm not an economist, so I can't really predict that. But I guess it just comes back to we do kind of put those assumptions into our models, and in order to determine valuations for businesses, and what will happen if their margins are hit because of increased labor costs or increased input costs. What will happen if they can't pass through those increased prices to consumers, but it is definitely something we're looking at and trying to look at. Okay, what are those companies that do perform well in inflationary environments? For example, supermarkets, because they can pass on those costs, and it's just trying to looking at the portfolio as a whole and thinking, do we have names in the portfolio that are kind of inflation beneficiary names, and just taking more of a balanced approach to inflation. I guess another thing to call out, another theme that we saw during reporting season, was just how much cash companies have on their balance sheets now. There was a kind of a panic situation last year and a lot of companies raised money, and a lot of them raised them at very, very, very low prices. And then they found out that the environment wasn't nearly as bad as they thought, and now they've got a whole lot of cash on the balance sheet. So we're seeing a lot of either cash being returned to shareholders by dividends. We're seeing a lot of share buybacks, and also a lot of M&A going on in the markets, and so those would probably be kind of the two themes that we saw come out of reporting season.
Yeah, those are really interesting themes, and it's whenever I hear people like you talking, it's a nice reminder of. Actually, when you drill into some of these companies' balance sheets, they look really, really good, even though there's all this concern in the environment about the here and now. When companies have actually got such strong-looking balance sheets, it's really encouraging for investors. And on the inflation note, people love it when economists say it depends. It's something we say all the time that's not particularly helpful, I guess. But it does depend. This inflation, we keep on saying, is it transitory or isn't it? And that'll, I think, be a big question that will be focused on over the next few years. But one of the other themes that we have is we do feel like we've turned a corner with interest rates. Term deposits, for example, are looking a lot better than what they were a year ago in terms of the rate, but not when you factor in some of the inflation that we're starting to forecast. And it's gone so quickly from inflation being a problem because it was just non-existent and firms didn't have much pricing power, to suddenly we've got 3% inflation. And that's another thing I wouldn't have believed if you'd told me a year ago that inflation was going to come back with such gusto, but it certainly has, and it's something we're forecasting to stay pretty strong over the year ahead. But that is it transitional or not, I guess, is probably something we'll be talking about in a podcast early next year, I would imagine.
Yes, yeah, definitely.
And hopefully by then we can be doing it face to face. So I guess we've both got inflation and the transition out of this lockdown on our minds for the next few months at least. But hopefully it won't be a theme that we're talking about in 2023.
Yeah,
we might have got back to the world being a little bit more normal. Yeah. Hey, well, thanks for joining me today. We seem to have covered quite a few different subjects, and good luck with your podcasting. And I really encourage people to have a listen to it.
Thank you. Thanks, Chris. It was great to chat.
Thanks for coming in, or being online, or whatever we describe when we're having a virtual podcast. Thanks for listening to the ASB Investment Podcast. If you have any thoughts on today's episode, or if there's anything you'd like us to discuss on a future show, get in touch at podcasts@asb.co.nz.